A quiet revolution is reshaping how nations tax and track, powered not by policy but by technology. Governments across the globe are digitizing VAT and GST to outsmart fraud, tighten compliance, making tax systems smarter and enabling real-time enforcement. Industry trailblazers unpack the maze of ERP migrations, GST complexities, e-invoicing breakthroughs, and AI-driven tax strategies, showing how innovation and collaboration have redefined the rules of finance. Let's take a look. Hello and welcome to this very special episode of ET Now Tax Transformation Series powered by Thomson Reuters. And I'm joined by three experts and we will be breaking down and simplifying tax and what's happening in the space. What's the transformation that's being seen? So first, let me introduce my three guests. We have with us Vishal Parekh. He's the head of corporate for Asia Emerging Markets at Thomson Reuters. We have Mark O, the indirect tax portfolio leader for Asia and Emerging Markets at Thomson Reuters. And we have Janak Bhuta. He's the head of corporate sales, South Asia, Thomson Reuters. Gentlemen, thank you so much for joining me here today. Vishal, let's start with you. So governments across the globe are revisiting their VAT, GST legislations. There are changes happening. People are moving away from legacy, moving towards digitization. So while we say, technology is omnipresent, it's happening in tax as well. Do you think now is the time for organizations to pivot from, the legacy, the manual process to technology in tax?
Before I jump into answering your question, I'll just give you some context of how I think about it, right? Governments globally are behaving a lot more like corporates as the evolution happens in terms of the way professionalization is kind of seeping into governments, right? So if you think about government as a corporate, right, what is the objective of corporates is making sure that you protect your revenue and increase that. So 90%, based on stats, 90% of government's revenue, which is considered as a corporate and for this good conversation, comes from taxes. Now, as you have the ability to use technology, which obviously everyone in the globe has today and governments are at the forefront of it, what would you do to protect your revenue, right? Use technology, and which is what you're seeing, that big digitization from the government side. So this is the big change in terms of how tax is seen as a source of revenue for governments versus obviously corporates as a cash outflow. If you think about governments, they are constantly leveraging technology to improve the leakages. Now, one study from McKinsey, this is several years dated, but talked about almost a $5 trillion leakage. Wow. This is not, by the way, tax avoidance and tax evasion. This is pure leakage. Is the tune of $5 trillion, which is equal to almost the GDP of Japan. And if they plug in some of that through digitization, which is how it's going on right now, that's a big positive. Now, what is that impact on corporates? If I speak, from my tax experience, right, 15, 20 years ago, you'd go to the tax authorities with these big data files or big physical files, and you dump all of that on the tax authorities' desk, and they'd start wondering where to start from. Yeah. In today's world, though, when you talk to corporates, all of them have a universal kind of message when it comes to dealing with governments, that the governments have more data than they have of their own business, right, and of their own tax liabilities. And I think that's where the need is. So to answer your question now, after giving this context, I feel like if it's not just now, you're possibly late if you haven't done it already. Because that's kind of, as a corporate, you have to digitize, you have to understand your tax liabilities much better, and that is where the world is moving towards, because governments are pushing that digitization as opposed to corporates doing that, given that that's their source of revenue.
So Vishal, but what are some kind of major roadblocks that you see that companies would be facing in this digitization? Because it's not as simple as it sounds.
Exactly, it's not as simple. Now, if you think again of corporates and say financial systems, right, or ERPs and so on, the likes of the larger global financial platforms, when you have to control your revenue, it's very easy to do that. But when you are having a tax system, you need to kind of have the content which powers those tax systems, because what the rate is in India is not the same rate in Singapore, not the same rate in the US. And all of them have almost on a daily basis changes happening, which is where the challenge is for a large MNC to try and understand how do you really pivot from just managing your tax liabilities, but also kind of ensuring that the content around the tax rates and rules and regulations which are changing are kind of moving in the same direction. So what we see our clients do at Thomson Reuters is leverage our platform to try and make sure that it's almost like your parallel ERP running, but specialized for tax, powered by the content we have. And I think that's the big game changer in terms of how you manage that.
So that's really important, and it's an important insight there. Thanks for that. Mark, moving on to you, I want to talk to you specifically about e-invoicing, and you're bringing in a good global perspective also. So now, for example, for e-invoicing mandates are also increasing. We've seen Malaysia going live, Singapore, UAE, Germany are next. So how are customers keeping up with these mandates? Because they're changing, but customers have to be nimble enough to bring in those changes, and the issue is it's different jurisdiction from jurisdiction. What's your insights?
Great, that's a great question, Simon. Thanks for that. I think that you're right. I think the proliferation of e-invoicing is so fast, right now. I mean, Vishal mentioned the $5 trillion tax gap or the tax leakage. That's what really has driven e-invoicing. And if you look at some countries that were perhaps the first movers in that, Italy as an example, brought in e-invoicing to manage that indirect tax gap, and we saw that they were managed to close that tax gap by billions of euros. So quite quickly, other tax authorities around the world decided that, hey, that's a great way of closing that gap. Right now, we see that there's over 70 countries sort of around the world that have brought in some form of e-invoicing mandate, and that's the key. That with those mandates, that there are over 6 different models, and the key for that is that there is no one standard, across the world. So what we are seeing with our customers and large organisations is that how do they manage those different models? If they're working in those countries. The other part I would say is that with those different models, there are different data fields as required. So you may have the same model, but they have different data requirements. So for a large organisation, how do they handle that? So to answer your question, I think there's probably three methods or versions that I see sort of organisations when they're looking at those those mandates. So one is that some organisations will adopt a wait and see approach, quite reactive. Like if a mandate comes, then they will look to implement. The second one will be trying to bring together some form of centralisation and look at it from a holistic standpoint. And the third, I think, is bespoke. So perhaps using different solutions, different e-invoicing technology, for those particular jurisdictions.
So Mark, just taking this one step ahead, because there's a kind of a trend evolving where for large taxpayers around centralization of e-invoicing. What are the major benefits that you're seeing with that?
Yeah, I think centralization is probably what we see as the best in breed, or the proactive approach, where large organisations will think about their operations and their presence in those jurisdictions, and with that comes the benefits. I think perhaps some of the benefits will be scalability. So if they are operating in, say, 30 countries, but they are growing into other jurisdictions. Larger organisations tend to do that either by M&A or by creating operations in other countries. They are able to use that centralised technology for those particular mandates. Keeping up with those changes as well. So when more mandates come in, having a centralised solution that is able to handle those new jurisdictions, I think does make it perhaps more efficient to handle those.
A key important thing to have.
No, in fact, I will just quickly add to this, right? So e-invoicing centralization, absolutely. But if you really think about tax as a whole, governments across the world are collaborating, having conversations, sharing data. And tax by itself, which was in the past, and I think Mark and I with our tax experience can always attest to that, was very local. right? Hey, listen, I'm going to solve for Singapore, I want to solve for Italy, I want to solve for India, and I don't care about like, how that data flows into the central repository. That's changing. You talk about Pillar 2, you talk about CBCR, you talk about all these different kind of tax laws. They're all converging into one global kind of platform for tax, and that's I think where e-invoicing kind of is leading that charge. Global minimum tax is possibly leading that charge on the direct tax side, and eventually all of these are going to converge.
I'll take that perhaps one step further and say that with that real-time reporting and that, with that convergence of data, the organisations they can't wait till the time of the audit, which is traditionally where most tax authorities would be looking. You'd make a filing as an organisation. You could wait 3 years. You'd wait 4 years for the tax authority to come and talk to you. That doesn't happen anymore with real-time reporting. It happens at the time of the transaction. So, to Vishal's point, managing the data at the time of the transaction, being able to kind of provide that, in an accurate form, is critical now.
Absolutely. I mean, we're doing real time everywhere else. Why not in taxation to help move things faster, make them streamline them? Janak, coming to you from the India perspective, now GST compliance, it is not an easy road. It's had its ups and downs. There are complexities involved. Tell me, in your conversations with your customers, what are some of their key concerns and some of their expectations when it comes to the India GST compliance?
The governments are way forward in terms of adopting technology, and the corporates need to do a lot of catch-up, right? And while we are discussing with our customers, there are a lot of concerns that have come in, but I would just like to highlight a couple of them. The first one, the major concern that I would like to kind of highlight is dependency to be compliant, right? When I say that today, it's not only that you file your GST returns and you are compliant. There is a lot of dependency in terms of your vendors, your transporters, whether have they filed the returns on time, have they filed the right returns, have they paid their taxes on time, your transporter, whether have they kind of given the e-way bills. So there is a lot of dependency, and because of the dependency, corporates kind of, even though they want to be compliant on time, they are not going to be able to because of these dependency. So that's the major concern. The second, I would say, is rework during GST audits, right? Back in 2017, when GST was introduced, there was a need from the government that organizations file GSTR 3B summary report, right, which was a temporary arrangement. Now in 2022, the government came back saying that we will audit the report that have been filed by you, which was temporary, right? Now, because it was temporary, a lot of organizations took the route of filing it manually. They've used Excels. Now, again, when there are audits coming in, they are struggling to kind of get that data. And while they are struggling, they have to rework on that data. Now, when they rework on the same data, it's about putting in more efforts to do the same job that was done way back. Second is dependency on the people. You do not know whether the people are around who have done those filings back then. And the third is the data accuracy, right? Because you do not know what you filed back then and what you're going to be doing now. So that's the second concern. And the third concern is the constant change, right? How do we live up to the changes that are coming in? Now, if you look at it, it's not that GST got introduced and everything is settled. I do understand that government is thinking about how they can avoid leakages. However, with that, they're coming up with a lot of new reforms and regulations. And that is where, if I give you examples, recent mandate for ISD, IMS coming in, which is a real-time vendor checking of invoices and credit notes. Now, for the organizations, for the corporates, the challenge is more around how do they keep up with all these changes, right? They're not going to go back to their IT team saying that, okay, you need to change the ERP systems now. It's not going to be possible for them to, you know, kind of have those changes done on real time and the agility to, you know, kind of make those changes. And that is where organizations are struggling to ensure that they keep up with the regulation changes.
Right. And so, you know, Janak, one more step ahead, because you mentioned IMS also. So now, do you think this follow up with the vendors, first for 2B reconciliation, now for IMS, is it clearly sitting with the correct team, the tax, the AP, or both? What's the view there?
Yeah, so IMS is real-time vendor checking of vendor invoices and credit notes, right? And now if you look at it, we're talking about vendors here, right? So on the surface, it looks like the AP team is going to be responsible to provide the data and ensure that vendors are providing the right invoices and the credit notes. However, if you look at it, who is going to be accountable? It's going to be the tax team. Right. So earlier, if you look at it, the tax team and the AP teams and AR teams used to work in silos. But now, if you look at it, it is going to be equally important for them to collaborate here so that they can have the right data and they can ensure that they are compliant.
Wow. Okay, that's important takeaway then for all our viewers here. Mark, you know, spoke to Janak about the India bit, coming to you now from a global perspective again. So the global compliance, of course, India is not the only jurisdiction with the indirect tax, and the other jurisdictions like US has a different kind of system, LATAM, Asia. So in your experience, what is the indirect tax jurisdiction that you feel has been quite interesting to implement at TR?
It's a great question. I would agree with you. I think India would be, you know, potentially top 3 in terms of, you know, complexity of tax legislation, and the pace that it does come with is, you know, hard to keep up. I would say perhaps potentially the US, as you say, would be, you know, perhaps the most complex or one of the most complex with their sales and use tax legislation. Just sort of seeing how that has sort of moved, and the reason for that is that it doesn't happen just at a state level. So there's sort of multiple levels of sales tax, and then the municipal level, the council level, the council level, the state level. Then you've obviously got the federal on top, but overarching sales and use tax. So I think that's probably, you know, perhaps the most complex that our customers are, you know, are facing.
Fantastic. And if I switch gears to VAT, so any global VAT jurisdiction that you see can pose a significant challenge because of the revision of their VAT legislation?
There are so many. There's so many that are changing. I think, you know, a couple that spring to mind. You know, obviously Brazil's, you know, tax reform, you know, is constantly evolving. So that is a big change. You know, I think that the alignment or the pivot to global VAT standards in some of the Asia countries, you know, as well. You know, so China and Vietnam, you know, come to mind as well. You know, are becoming particularly complex as they pivot.
Yeah. Fantastic. Vishal, you know, one important thing that I want to talk to you about is data management. How has TR managing the complexity of managing this data? How are you helping clients manage their data? Also the different teams that need this data. So it's not just tax, it's the accounts receivable, accounts payable. So just you shed some light on that.
We are helping our clients mainly around the fact that we're possibly the only key provider who actually has direct tax and indirect tax on one platform. And we, in some ways, are investing in that with an understanding that eventually all of this is going to converge, which in the future, maybe 5 years, maybe 10 years, maybe even sooner, right? The pace at which AI is growing, you never know. Governments are going to be able to do that a lot sooner. So the way we explain this to our clients is that, hey, listen, you take us, you kind of you know, employ a solution like ours, and it's not obviously any tax solution, and that will really future-proof you from all the other kind of changes that are coming in, because tax is a custom solution. It is not like your financial system, similar to, like, you know, how you look at it in payroll solution, it cannot be just a standard solution which you build every time, right? It is something which you kind of converge, and I think what's good about the technology today is that through connectivity and APIs, you can actually talk to each of them seamlessly and real time. And I think that's what we aim to do. We have APIs to pretty much most of the key financial systems, and that's kind of really helps get that transaction flowing seamlessly.
Fantastic, because it is so important this communication within that data itself, because the systems have to be talking to each other and the real time especially with the government. One last bit to you, Vishal, before we wrap up. You also mentioned that 5 years, 10 years, maybe earlier. But if we, four of us, are sitting here maybe 5 years later, how? Not talking about the regulations, because those change
those
I don't know, per day, per week, whatever. How do you think the overall scenario with technology coming in to manage data, to simplify global taxation, how do you, just phantom, look into the crystal ball, just phantom a guess 5 years later, what could the scenario be?
I think again, we talk about this a lot during our strategy session, right, at Thomson Reuters, as to what we see 5 years down the line. And 5 years down the line, as I said, sooner or later, plus or minus a few years, what we see is that everything is real time. Systems are connected to the government, which we're already seeing that, right? Financial systems or corporates actually speak to the government real time. There are no compliance returns, so a traditional tax guy, chartered accountant, CPA, always thinking about my return, my compliance return kind of goes away, because there will be no returns, in our opinion, because all of the returns will be prepared by by a software within the government and sent that over to the corporate. Corporate possibly just revalidates it. If it's any queries or concerns, kind of has that conversation all seamlessly through tech, and that's how it goes. Eventually, direct tax, indirect tax, income taxes, as the common balances, VAT, GST, indirect taxes, they all converge into one tax portfolio for the government, because that's how corporates are looking at clients, right? They're looking at strategic clients across all different products they have. Governments, in my opinion, also look at corporates as one strategic customer across all the portfolios, the revenue they get from them.
Fantastic. Well, thank you so much, Vishal, for your inputs. Thank you, Mark, and thank you, Janak. That was a very insightful discussion. Thank you so much, ladies and gentlemen, for watching this very special episode of ET Now Tax Transformation Series powered by Thomson Reuters, and I'm sure you're taking back some very valuable insights from our conversation today. Thank you so much for watching.